What's good, y'all? So this is how I made $442 trading the NASDAQ today. So let's get right into the charts. So as always, starting on the daily time frame, first thing you want to do is identify where your imbalances and your liquidity levels are. So the main imbalance that we were kind of identifying for today was this bearish fair value gap. It's buy side imbalance, sell side inefficiency. So you can see here yesterday, we traded into this and kind of rejected it with institutional order flow intergel, but we didn't quite trade into the consequent encroachment or the midpoint of this daily fair value gap quite yet. And as I had mentioned earlier, we still had this daily SMT here, right? This high was not taken out yet on the NASDAQ, while the S&P 500 had taken out this high already. So because of that, I had, again, a bearish bias kind of going into this day. So let's kind of look at the lower time frame, and I can show you, where my entry mechanism was. So going into the market open at 9:30 a.m., this is kind of what the market looked like going into 9 a.m. So you can see that we had liquidity here above us in the form of buy side liquidity that was from the overnight highs. So we go ahead and mark that. And then we also had liquidity below us from 7 a.m. low here. This was our sell side liquidity. What you'll notice going into this day is we were still trading inside of this. Going into the day, we were trading inside of this daily fair value gap, right? So we did have this, also this 1 hour buy side imbalance, sell side inefficiency, which was a bullish fair value gap, which we were still holding. So at this point in time, it's kind of hard to tell where the market would go. I'm still leaning bearish going into the market open, but until we get some sort of inversion or some sort of change in state of delivery, it's kind of hard to justify any sort of, bias, a strong conviction going into the day. So once the market opened, you can see we did trade higher and sweep this buy side liquidity here from the London highs at 3 a.m. Right. So once we swept that liquidity, the 10 a.m. Candle opened and we had a strong sell off down here. Right. So at this point, this was a very, very, very bearish indication that price was looking to go lower. But because the price was already all the way down here, going into, I would personally wanted to see a retracement if I was going to take any shorter shorts. I was not going to short all the way down here when it was looking like this is potentially the draw on liquidity here from the yesterday's low, which is previous day's low, right? So I wanted to see us pull back into, notice we had this change in state of delivery here, right? So we had this 1 hour change in state of delivery that now the market had formed once we closed below these series of up close candles after sweeping buy side liquidity. And we also did have an SMT with the S&P 500, right? This high from the 29th, yesterday's high, was not taken out on the S&P 500. So that gave me a bearish bias on the higher time frame now. So now we had a sweep of liquidity from London. We traded, had an SMT on the higher time frame. We also had a change in state of delivery on the higher time frame. Now I want to see the market pull back either into this inverted fair value gap, this BISI, or pull back into this 1 hour change in state of delivery, which happens to be in confluence with the start of this daily fair value gap, right? So at this point now, going into the next hour, the market did kind of rally back all the way back up into this. And that's why I said it's not good to short down here in such an extended move. You can, but I rather personally would either just let it go to the draw or wait for a retracement back. And if you notice too, we pulled back right at 11 a.m. into this inversion. We closed inside of it right at our 1 hour change in state of delivery. And this order block here, right? These two up close candles is our order block that we were trading in. So if we go to a lower time frame, I can show you the trade. What you'll notice is that we had formed all this buy side liquidity, right? All this low resistance liquidity from here to here, that was all taken out at once, right? So in this rally back up, it was all to grab this liquidity here, right? So anyone who had got short, all retail who had got short on this drop, they were putting their stops above here. And in the morning session, I was waiting for us to potentially come sweep one of these highs to potentially look for an opportunity to go short, but we never swept these highs, so I just kind of let it go. Until I personally need to see a sweep of liquidity before I enter any sort of trade, either that or SMT divergence. And so on this particular trade, we did have this SMT divergence. It's very small, but nonetheless, it is a SMT, right? The NASDAQ failed to take out this high from 10 a.m., 10, 12, 10, 11, while the S&P 500 did take out this high on this retracement. So at this point now, this is kind of what the market looked like. And as y'all know, my model is always going to be, I need to see an inverted, right, fair value gaps in some form, right, in order for me to justify shorts. Yes, this is a place I'm looking for the market to potentially short, but in order for it to be validated, I need to see some sort of inversion, right? In the same way I showed you on the hourly, right? It's that same model I just showed you on the hourly time frame. It's now here on the 1 minute time frame, right? A sweep of liquidity. I want to see an inverted fair value gap, and then I need to see this change of state of delivery, right? I need these series of up close candles to now be to now hold as a order block, and for that to validate our change of state of delivery, right? So going into the 12 p.m. hour, you can see we had this huge displacement down 21 points on this one candle, and that at this point validated the change of state of delivery. We had this inversion, we closed below these up close candles, so now this was our order block. Now we did form this 1 minute sell side imbalance, buy side inefficiency here, which I was looking for the market to either hold or trade back higher into to retest this CISD. So personally, I would have preferred for the market to trade back higher and retest this either inversion or CISD, so I can get a better risk to reward, but we didn't get that. So I took my entry here once we traded into this fair value gap with my stop loss above here, right? Or even a little bit higher consequent encroachment of the inversion, right? Targeting our internal liquidity, taking the low hanging fruit here at this sell side liquidity. So I did take a couple small losses earlier in the day, which were like $50, another $50 loss. So I was down about $100 going into this trade. So what I wanted to do going into this trade was target this ultimately, but I knew I would probably take some off at somewhere along this low resistance liquidity. There was a new week opening gap right here at this order block. So this is where I was looking to take a majority of my position off and then leaving a couple runners down to here. So if we kind of replay this, you can see the market this was now in our 1150 to 1210 macro, right? The market never really was strong enough to get back into the consequent encroachment or midpoint of this bearish fair value gap. So that told me this was definitely looking good to go lower because we couldn't get back up there, right? It was struggling to get back up there. Every time it tried, you can see it failed, right? We came in, swept this minor liquidity here, right? And then we went lower. We then formed this order block. So remember, if we're looking for price to go a certain place, we need to watch order flow and how is the market ultimately delivering price? Are we respecting order flow? In this case, are we respecting bearish order flow? What does it look like to respect bearish order flow? Well, these fair value gaps, these SIBIs should be, we should stay below the midpoint or don't enclose them at all, right? We don't want to invert these. These up close candles should be used as some sort of resistance, right? We don't want to go close above these, right? We can trade into them, but ultimately want to reject them. These bullish fair value gaps should be inversions. These should all become inversions that the market now can use to as resistance to trade and continue lower. So you can see we do get some good delivery here. Now we have very heavy order flow, bearish order flow here. We form another, we trade back into this order block here, right? And then just kind of watching price, seeing what it wants to do. We haven't formed any bullish fair value gaps, so at this point we're not very bullish at all. So we do kind of just trade into this fair value gap again, but you can see we never get to the midpoint, right? As long as we're staying below the midpoint, that shows price price action and order flow is very bearish. So that's what you want to see. And so at this point, we do continue to trade lower, and we do form this bearish fair value gap here, right? And so now once you see this, this is when you want to move your stop to break even, because at this point you really don't want to see this trade come back because we have all these bearish PD arrays that should respect price, right? These up close candles should respect price, right? This SIBI, this midpoint should respect price, right? So you can see we do trade into it, and then ultimately it gets rejected immediately, right? So we form this order block here, right? So that should respect price. And then we do, you know, come down, sweep this new, there was, like I said, there was a new week opening gap here that it ended up taking some of my position off there. And then we do trade into this order block here, right? And down lower, and now form this propulsion block, right? So this order block is this level, right? So we can go ahead and mark that as a bearish order block. And then we have this bearish propulsion block, which is just an order block that traded into an order block. So now this should send price even lower when we retest these series of up close candles here. So I took, like I said, I took 3 of my contracts off here, and then I had a couple remaining, and was holding my runners down to this sell side liquidity level that was resting here at this low, right? So you can see that the market again traded back into this propulsion block, tested the order block, and back into this SIBI, right? But we never closed above any of them, right? That's why you have to be very patient. You can't get emotional, because you will get wicked out, right? This was literally just a stop grab right here, right? We came and swept that high, right? And then we traded lower, right? Traded back into the propulsion block, right? And then from there, we got some delivery lower, and ultimately traded down into the sell side liquidity that was resting here. I actually took one of my contracts off, I think here, and then when we pulled back, we had formed this fair value gap here, and what I did was I put my stop loss right at the top of this, and then I believe it came and stopped me out here. Yeah, so the second contract I took off right here, it wasn't actually down here. So, but you can see that was literally algorithmic price delivery, just watching order flow, right? Combined with a bearish bias, watching order flow down to your target. This is how you take quality trades, right? With a good risk to reward, right? This, like I said, having your stop loss above here, risking what, 20 something points to make potentially 75 points. That's over a 3-to-1 risk to reward, right? Even if you take this low hanging fruit and you take it all off there, still over a 2-to-1 risk to reward, right? 54 points to making 54 points to risk 22 points, right? With 5 contracts, that's $500. So you can see that's a great trade, right? And this was low hanging fruit. You get this and you're done for the day, right? And you can see the logic behind it. You can see it's very algorithmic. There's nothing here in which I'm sitting here trying to guess which way price is going to go. I'm waiting for price to show me what it wants to do, and then I'm reacting. So that was today's trade. You know, it's that we had FOMC yesterday, so it was we had a huge sell-off today. Going into tomorrow, I'm looking to potentially see what the market shows in the morning, and then I will react based off of that. So that's all I have for y'all in this one. I will see y'all in the next video.